Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried in corporate filings. And tonight we're diving into FTI Consulting Incorporated's latest report to see if their numbers are as solid as their advice. Get ready for a deep dive into financial performance, stock repurchases, and some fancy accounting terms you might actually understand by the end of this. And before we get into the nitty-gritty, if you love these kinds of no-nonsense corporate breakdowns, make sure you are subscribed and definitely check out our Discord community linked in the description below. It is where we go even deeper on these filings and share insights. So FTI Consulting Incorporated, a big player in consulting, has just dropped a report, a Form 8K to be exact. Think of this as an urgent update from the company. And the main reason for this filing seems to be sharing some financial information that they announced to the public on the 23rd of October 2025. Specifically about their results for the 3 and 9 months ending the 30th of September 2025. They've released a press release and even a transcript of a conference call discussing these results. Plus, they are providing a presentation that investors and analysts have been using. Now, they are also talking about some terms that might sound a bit confusing, like non-GAAP financial measures. Let's break that down. Basically, Georgia AP is the standard accounting rulebook that companies follow. Non-GAAP measures are ways companies adjust their numbers to show what they believe is a truer picture of their ongoing business performance. It is like looking at your car's engine without the flashy paint job to see how it truly runs. FTI Consulting is highlighting a bunch of these adjusted measures, including things like adjusted segment EBITDA, adjusted net income, and adjusted earnings per diluted share. They also mention free cash flow. They define segment operating income as a segment's piece of the company's total operating income. But then they talk about total segment operating income, which excludes costs that aren't tied to a specific business segment. This is a non-GAAP measure. They use it to calculate adjusted segment EBITDA, which is segment operating income before things like depreciation, amortization, and other special charges. They say they use this to understand how well their individual business parts are performing and generating cash. Then we get to adjusted EBITDA itself. This is consolidated net income before things like taxes, non-operating stuff, depreciation, amortization, and some other adjustments. They also have adjusted EBITDA margin, which is just that adjusted EBITDA as a percentage of their total revenue. The company believes these non-GAAP numbers, along with their standard GAAP numbers, give everyone a better understanding of the company's real operational performance and trends. Think of it as looking at the company's health from different angles. They also discuss adjusted net income and adjusted earnings per diluted share, or adjusted EPs. These are similar to their standard net income and earnings per S-Hair, but exclude certain items like changes in the value of acquisition, related costs, special charges, and any gains or losses from selling a business. Management uses adjusted EPs to consistently assess the company's overall performance. And finally, free cash flow. This is what is left from cash generated by operations after they've paid for things like new equipment and property. The company feels this measure helps show their ability to generate cash for the business. Now, shifting gears a bit, the report also talks about share repurchases. The board of directors authorized an additional $500 million to buy back the company's own stock. This is part of a larger stock repurchase program that has been going on for a while, with previous authorizations totaling billions. As of the 21st of October 2025, they had already bought back over 16.7 million shares for about $1.7 billion. So, with this new $500 million authorization, they now have approximately $500 million left to spend on repurchasing their shares. The company mentions they can buy back shares through open market purchases or other legal methods. The exact details like timing and price are up to management, and they'll consider things like market conditions and legal rules. They might use their cash on hand or even borrow money. The report also includes what they call forward-looking statements. These are basically educated guesses or plans about the future, like their plans for stock repurchases. They use words like estimates, expects, and anticipates. They're telling you these are their current beliefs, but that there is no guarantee these plans will actually happen. They also point to other filings for a full list of risks that could impact these future expectations. Now let's look at the actual financial information that has been attached. This press release from the 23rd of October 2025 is where the real numbers live. While we don't have the full tables here in this report, the filing tells us they announced their financial results for the 3 and 9 months ended the 30th of September 2025. This is crucial because it tells us how the company has been performing recently. The presentation materials also furnished with this report would typically contain the detailed financial tables. In a typical earnings release, we'd be looking for things like revenue growth, profitability margins, and how much cash they're generating. For a company like FTI Consulting, which provides professional services, We'd want to see if their revenue streams are expanding, if they're controlling their costs effectively, and if their projects are profitable. When they talk about cash flow, for example, if their net cash provided by operating activities is consistently positive and growing, it is a strong sign that the core business is healthy. If their free cash flow is also robust, it means they have plenty of money left over after running the business and investing in its future. This excess cash can then be used for things like paying down debt, making acquisitions or returning value to shareholders through dividends, or, as we saw, stock repurchases. Looking at the overall picture from this filing, FTI Consulting appears to be in a phase where they are actively managing their capital. The significant authorization for stock repurchases suggests they believe their stock is undervalued, or that it is a good way to return cash to shareholders. This can be a sign of confidence from management in the company's future prospects. Some Curtis P. Lusso. What does this all mean? FTI Consulting is keeping investors informed with details on its financial health and strategic capital allocation. Their use of these non-GAAP measures, while common, means investors really need to dig into the reconciliations provided in their full press releases and presentations to understand the true picture behind the adjustments. The substantial stock repurchase program signals confidence, but also raises questions about whether they see better value in buying back their own stock rather than investing heavily in new growth initiatives. It is a balancing act. Now, looking at these results more broadly, FTI Consulting appears to be actively managing its shareholder returns through significant stock repurchases. While the specific financial numbers directly from tables aren't presented here, the narrative suggests a company focused on demonstrating its operational performance through various adjusted metrics. The key for investors will be to compare these adjusted figures against their historical performance and competitors to truly gauge their strategic direction and financial strength. Are these repurchases a sign of a healthy company returning value or a signal of limited organic growth opportunities? That is the crucial question. Alright, that is our breakdown of FTI Consulting's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.